Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, bulls continue to party on the Lal Street. Eventful day ahead, lots to track. But first up, the top headline for you. Indian markets start August on a front foot as bullish momentum returns across the globe, thanks mainly to strong liquidity and market-beating earnings. The Nifty is likely to scale a fresh high, thanks mainly to short covering and fresh long positions. Auto giant Maruti's Q1 profit beat street expectations as lower raw material cost, higher sales and rising other income fueled bottom line. Maruti says it won back market share in the CNG and the SUV segment thanks to a strong lineup of product offerings. Very good morning, Shail. It's a fresh day, and after I think a 2-day decline, domestic equities resumed their uptrend. I think because sentiments improved, taking heart from positive global news. And I think the last trading hour was a game changer in Monday's trading session. But we are starting with a fresh month now. The August series has been good for markets in the last 2 years. But let's talk about, the Nifty strategy first. Where do you see Nifty after nearly a 4% rally in the July series?
Good morning, Tanya, and hello and welcome to everybody who's watching us on this fantastic morning. Tanya, everything and anything that could go right is now back in the groove as far as the Nifty is concerned. We are again headed higher. And a lot of positive things have happened not only overnight but in yesterday's market. Let's go about them one by one. Of course, we've had one blowout results by Maruti, and that is what was needed as far as the market sentiment was concerned to take it back up to the 20,000 mark. The Nifty, as you very rightly mentioned, had a spectacular late afternoon session yesterday. The trading range was 170 points and the index closed near its day's high. What was really interesting is that this rally came on the back of a very heavy short covering in the options market. The Nifty options data showed a downtick, so that's really good. And the other interesting part was the Nifty held its 8-day exponential moving average, which is a very good sign for the bulls. Now the cues coming from Wall Street, which you will discuss in a detail, are fairly strong. And over the last 3-4 trading sessions, we've seen the Nifty give back about 400 points back to the market. Yesterday's low and the day before yesterday's low, that is Friday's low, was about 18,600, and that's a very crucial level both for bears as well as bulls. It's been tested once, so it's positive for the bulls, and it has a very strong put writing there, which means that a lot of support is likely to happen from the traders' point of view. So all things point to a fairly good robust trade today. Maruti's earnings are fairly good. Nifty was, as we've discussed over the last week, 10 days, in a sideways to a consolidative phase. That's all over. You see this fantastic chart in front of you where the 8 EMA is held. And Tanya, the broader markets are showing a lot of traction to the positive side. If you see yesterday's F&O trade, there were 16 F&O stocks that hit record highs, and there were 29 F&O stocks, including these 16, that were at 52-week highs. So the overall market is in fairly good shape. People were just waiting for Nifty to restart, and tech, large cap tech, auto, Maruti of course, and metals are all going to again take this thing right up. So I'm looking at 20,000 in a fairly short space of time, and the maximum resistance is placed at 19,800 as far as the call writing is concerned, but 19,600 to 19,800 is the range for today. Tanya.
Okay, absolutely. That's the range that is coming in. And also, let's talk about Bank Nifty now, Shell. The banking index, which has the highest weight in Nifty, ended on a flat note yesterday. So, what are you looking on Nifty Bank today?
So, Tanya, the same thing. Something significant happened to Bank Nifty yesterday. As you would see the daily chart right in front of your screen in a short while. The 20 EMA was tested on the Bank Nifty yesterday. A 350 point trading range that came in. And the index is between 8 and 20 EMA. Again, the options data shows that Bank Nifty open interest rose about 4% due to a long build-up. And the beauty is that if you look at the components of Bank Nifty, which are about 12, you see a lot of short covering, which is positive for bulls, and you see a lot of long build-up, which is again positive for bulls. So long build-up plus short covering will again see the Bank Nifty move towards higher orbits, and we've given the trading range to you. That's what I'm looking at as far as the Bank Nifty is concerned. Remember, today is the Fin Nifty expiry. So we look at the entire NBFC space, right from Bajaj Finance to M&M Financial Services to the two gold loan companies, Manappuram as well as Muthoot. So that's the small sub-segment of the market that will be overheated for today, it being Tuesday, and of course the auto data. Maruti will discuss in a while. Three positives, fantastic earnings. July auto numbers will come in, and of course it's Tuesday. If you see the correlation between Tuesday and Maruti, it's amazing. Tanya.
Absolutely. But Shell, also, the benchmark Nifty index, that index witnessed a significant rally in the July future and option series. But if you talk about F&O space today, what are you looking at in this particular space at this point in time?
So, Tanya, two things one must also understand. You've mentioned very rightly about the 3.5% uptick on the Nifty as far as the month of July is concerned. But the F&O space, including mid caps and small caps, has been buzzing with excitement, and that's because the small cap index rose about 8% in July, and the mid cap index surged 5.1. So the sentiment across the board is fairly strong, and the stocks to watch, at least in the F&O space, are based on either short covering or of course long build up, and many of them are extremely high beta counters. And let me just highlight a few. Among them, of course, Apollo Tires. We've seen short covering happening on this counter. It's super bullish at its record high levels, and about a 2% uptick on Apollo Tires at about 436. Remember, this is record high statistics for this. Very high delivery, about 100% more on Monday compared with Friday, and of course a downtick in open interest, down about 1.2%. So this is the chart to watch. Of course, India Cement, the highest beta stock in the cement space. The open interest is up about 11% in yesterday's trade. The stock at 221 is 2.3% higher. The charts are fairly good. Long build up happening here. Bulls taking positions both in terms of physical, that is higher delivery, as also on the technical side in the futures space. So these are the two stocks. Apart from that, you've seen a very strong rally happening in Bandhan Bank, about 9% increase in open interest, 3% increase in the price at about 224, and Hind Copper. Breakout yesterday, 10% higher. Delivery statistics are 4x, which means 4 times more shares were released in delivery on Monday compared with Friday, and of course a stunning rise in open interest, which is about 16%. Hind Copper is the stock to watch at about 142. Very, very high beta counters I am discussing, and all of them are based on technicals and on data. Tanya.
Okay, absolutely. And the good news is, Shail, that global markets are also supporting Indian markets at this point in time. And if you look at the US stocks, they closed little change on Monday, ending a strong July on upbeat company earnings and hopes of a soft landing for a resilient US economy. Dow was up around 0.28%, S&P also rose 0.15%, and Nasdaq was also up 0.21%. And if you look at Asian markets at this point in time, they are also trading on a mixed note as we speak. Kospi in the green, 1% uptick there. Hang Seng also in the green, Nikkei in the green, and they are trading on a mixed note. But what can we really expect from the overseas cues?
Tanya, very rightly. I mean, your commentary on the U.S. markets and the fact that they are firing up on all cylinders is good news for Dalal Street. Is all well, but the only chart that I am seeing to a large extent is crude oil. It's right there in front of you, and from its low in July. So 3rd of July, it was at $67, and now at 81. We are trading at its highest level since 17th of April. So if you look at the broader picture, all asset classes are rising. Commodities, including crude oil and precious metals as well. Equities, it has been a blowout for Wall Street as well as us. 16-month highs on Wall Street, and of course record high levels for us. Treasury yields are rising, that's dangerous. And of course you see crude oil. Apart from that, I would imagine the dollar index is also showing signs of strength, and that's never good news for equities. From a low of about 99.57 somewhere in the mid of July, we are at 102.03, so that's about a 5-7% uptick. So the strength in dollar index and the strength in crude oil are obvious and overt negatives for the Indian market, but it's a runaway rally based on liquidity, very heavy sentiment, and very strong domestic inflows on Indian markets. So they're ignoring for the moment crude and the dollar index, but keep it on your radar. This is something that's worrisome. Tanya.
Okay, absolutely. And what about the sectors, Shail? The sectors you are bullish on at this point in time, and the sectors one should avoid?
Tanya, PSUs. Yesterday I made an effort to type out the entire 70 odd list of central PSUs in a particular software that I use. So that's a blowout there. On a daily basis, you see maybe 4 or 5 PSUs hitting record highs, and some of them rising about 5, 7, 10%. So that's one sector I remain inherently bullish on. Of course, Maruti, blowout, autos, and metals on the long side, maybe some large cap techs as well. But these are the things that I'm watching. But why waste our breath? Kiran Jani joins us from Jainam Broking. He's the head of technical research at a very well-known brokerage. Welcome to the show. How are you looking at the markets, and where do you see the Nifty headed in a short span of time?
Very good morning, everyone. So first of all, if we check the current status of the market, it is something like we are driving a car on highway. Like we were into the city, we had all the kind of issues regarding the macros and micro, but today we don't have any kind of a such issue, and our market is really fantastically. If we consider our year-on-date performance, we are outperforming. If we check only about the July month, probably the US market has outperformed us. But looking at currently technical chart, we are trading at all-time high, where US market is trading below the all-time high. So here, where we can see the further rally in US market, and our market is also going to replica the same way. Now, looking at the level wise, considering the FII position, the amount of open interest put writers added yesterday, it is something massively. Since last 10 days, it was lacking off. Today, we are seeing that put writers are very aggressive. Level wise, 19,700. 19,700 is massive support for the today's day. Any dip considering 19,700 or below that, it would be the buy opportunity for the Nifty. And at higher level, we are seeing 19,800, 19,900 when the call writers are very aggressive. So market with a very positive tone, and the range is remain 19,600 to 19,800. Whatever dips are coming, it is like a buy opportunity. So our trading idea for Nifty is like 19,680 to 19,700 would be the buy zone. You go for long. The target would be 19,850 and the stop loss would be 19,620. So we are very bullish on Nifty. Whatever dips come, it is a buy opportunity.
Okay, absolutely. Very good morning, Mr. Jani. Tanya this side. And you know, what looks good on the charts in terms of stock futures, and where are the pockets of opportunities at this point in time?
Considering the index, we are in range. But if you have checked market since last 15 days or maybe month, stock specific and the sector specific movement are coming very sparkly and very supportive. We have seen the sector rotations also. So currently, we are seeing that there are two sectors which are very good. It's like pharma. We have already seen the rally. The auto is next one. We are seeing that auto has already been performed well, but yesterday we have seen some of the breakouts on auto sector. So auto would be on our radar. And next, as Sailji mentioned about the PSU bank. Yesterday we have seen number of PSU bank has been given a breakout from their previous range, the bearish range. So today, if anyone is looking for the sector, then auto will be the sector and the PSU will be the sector for the day.
Kiranji, what looks good to you on the chart when it comes to stock futures? Any trade that is there in your mind?
Yes. So we have two trades identified based on the chart. So as we mentioned about the auto sector, so our first pick is from auto sector, Eicher Motor. If we check the Eicher Motor daily chart, there is a clear-cut ascending triangle pattern breakout. If we considering the intraday chart, there is a rounding bottom pattern breakout. Eicher has performed well. Recently, we have seen some price corrections. Now that price correction looks like completed, and the momentum indicator again entering into the bullish zone. So we are looking Eicher to for the long side. 3360 is the settlement price. We would like to go long. 3400 would be the target, and 3334 as a stop loss for the Eicher Motor. The next stock is the Adani stock, Adani Enterprise. Since last long time, we are seeing that the Adani Enterprise into the a very small range. Yesterday, we have seen some spark on the stock. The range breakout is considering. Here also, there is ascending triangle pattern breakout on Adani Enterprise. The stock has closed on that highest level since month 2490. And looking at chart, we are estimating target of 2550, and we will maintain the stop loss of 2459. So Eicher Motor and Adani Enterprise would be our preferred pick for today.
Okay, let's discuss Eicher Motors in detail. I'm requesting the PCR to fire a daily chart on this particular stock. Kiran, trying to get your inputs in. The stock has been trying for the last 3-4 weeks to break past the 200-day DMA. Sadly, that's not happened as yet. The all-time high for this stock was, somewhere like the 3800 zone, 3866. So definitely there is a margin of safety, and the most recent low that you've seen is 3160. So that's a swing trade that's in work, which Kiran is trying to point out, and that's how Eicher is there about 8.6% higher over a 1-year period, and of course the Royal Enfield bike doing phenomenally well in terms of monthly sales, as Kiran pointed out. What's the medium term outlook on the charts for Eicher, Kiran?
So if we discuss in detail for the Eicher, if we check the current market chart of Eicher Motor, as you mentioned, that stock is was struggling to get on the 200 days moving average. Yesterday, we have seen that price is successfully closed on its 200 and 100 days moving average. So that's the prima facie indicator. We can expect that prices has been bottom out for short term. And again, if you check the volume wise, whatever the price corrections happened from 3600 level, we have seen the bottom somewhere around 3170. Since then, the volume was very rising. But recently, whatever the fall came from 3400 to 3300, the volume was dipped. So it is clearly seen that whatever dip came, it was buyed only. And whatever selling coming from top level, volume was very dry. So it is a clear cut technical pattern we generally considered as accumulation and a distribution. So distribution is not at peak level, but the accumulation is at peak level. Considering the open interest, open interest is also rising. Similar way, the prices are rising, so it is also a long built up consideration. So daily chart plus volume and plus open interest showing us a swing trade, as you rightly mentioned. So if stock price continuously closing or sustaining its 200 days moving average, then chances are very good that in short term we can see target somewhere around 3600. The level 3600 because of the daily, there was a gap on daily chart. So short term, the target is like 3600, considering the gap theory and considering the open interest and volume wise, we are looking that stock has clearly bottom out at recent juncture.
Okay, absolutely, Mr. Jani. Let's talk about PSU banking pack as well. I mean, some of the stocks like SBI, Canara Bank, they have hit their record highs. Any stocks that you like from this particular space, and what are your thoughts on large caps like SBI? I mean, is there more steam left in this particular counter?
So considering Nifty PSU, I would like to highlight something on Nifty PSU index first. So Nifty PSU index top out somewhere around 4600 during December 2022. Since then, we have seen that index chart was trading into the falling channel. We have seen that prices made a bottom somewhere around 3500, where 200 days moving average was there. Since then, again charts are started trading into the rising channel, higher top, higher bottom. Recently, stock has, Nifty PSU index has crossed is all long-term and short-term moving averages, created a ascending triangle pattern, given a breakout at 4200. Now, considering this breakout, we are expecting this index to touch 4800 level. So if index to touch 4800 level, then there are some preferred stock. One of is the SBI has to perform. Now, coming to the SBI, SBI is also trading at its all-time high. Recently, we have seen multiple bullish pattern like double bottom pattern and the ascending triangle pattern breakout. And a very recent, we have seen a cup and handle pattern breakout at level of 600. Now, considering that pattern, we are expecting at least 50 rupees move above 600. And the stock is consolidating above 600 since long time. If you look the momentum indicator at lower time frame or on daily time frame, it is trading into the bullish zone. So we are looking and we are very aggressive on SBI. If any dip comes around 600 or at even a current market price, we should go long. The positional stop loss is below 600 and the target is 650. If 650 is also crossed, then we can see some major shorts covering, because at 650 call writer are very aggressive on option side also. So at current market price or whatever dips come, we should go long. The positional stop loss is 590. Initially, we are expecting target of 650, and above 650 we can see 680 also. So in PSU bank, SBI would be the preferred pick.
Okay, absolutely. And what's happening in the power sector, Mr. Jani? I mean, is this sector on the road to recovery? Because if you see, if you look at the stocks like REC, PFC, NTPC was one of the top gainers, and REC and PFC have doubled in the past 12 months, and also Power Grid Corporation also. What's really happening in this particular sector? Because I think people are looking for ideas. So is it a new sector that is coming up for investors?
So whatever name you have given, there is a two stream is playing out. One is the energy or a power, and another is the PSUs companies. So coming to the Nifty Energy Index first. So if you check out the Nifty Energy Index, we can see that the top is rightly at 29,000 during April 2022. Since then, there was a falling trend line resistance was facing by this Nifty Energy Index. We have clearly seen that index has given a breakout from that falling trend line somewhere around 25,700. Since then, we can see the sharp rally towards 26,800. At current juncture, we are already we are observing the breakout level. The index momentum indicator is fairly and strongly trading into the bullish zone. Considering the stock, NTPC, PFC has already given a good return. At the current market price, we are expecting some good movement to come in Tata Power. Tata Power was in underperformance since long time. Currently, we are seeing that inverted head and shoulder pattern breakout on Tata Power. So Tata Power is preferred stock in power sector. Whatever dip is coming somewhere around 232, 228, it should go long. And the target, considering this pattern, if someone is ready to invest for 3 to 6 months, Tata Power would be the preferred choice again. Looking at current market price, we are expecting target somewhere around 300, and the stop loss would be 210 rupees. So Tata Power 236 is the current market price. If any dip comes or at current market price, we should go long, and the stop loss would be 210 for the target of 300.
Yeah, Kiranji, we are just very close to markets pre-open trades. May I request you to kindly offer your views on Maruti, and requesting you to be a bit precise.
Yeah. So coming to the Maruti, on daily chart here also we can see some range breakout. So definitely considering the 20 days moving average, one should also go long on Maruti. And it is a conditional buy. Go long only if Maruti price sustain about 9,800. Stop loss would be 9750, and the target would be 9,900.
Okay. At 99 is where Mr. Jani feels the stock would come to. Of course, we'll have an interview with the chairman, Mr. R.C. Bhargav, shortly on Maruti. Like I said, it has been a blowout quarter, and both the top line as well as the bottom line has far exceeded the estimates of the broader street. Kiranji, what would be your favorite PSU stock in the defense space? Yesterday we had a breakout on BEML. There is a runaway rally on Mastock. Any other shipyard, Cochin or Garden Reach, all of them are headed towards fresh highs, and of course Hindustan Aeronautics. Anything that catches your fancy which is still undiscovered by the market?
So considering the defense PSU stock, I don't think so. There are any number of stocks or any name which is undiscovered, because we are seeing this rally since last, if I'm not wrong, 1 year or maybe 6 months. Coming to the BEML, the 15 years breakout been given by the BEML if you considering the monthly chart. So if any dips come on BEML somewhere around 1900 or maybe 1800, we like to go by. The stop loss we have to maintain, it has to be below 1800. And if someone is looking very long term investment, then only BEML should invest it. For intraday or for the swing trading, we would suggest avoid BEML. Now coming to the another stock, as you asked, it should be about GRSC, Garden Rich Ship. If you considering the daily chart, stock has been trading above its all important moving averages. Whatever recent dip come, every time a stock price is taking support of 20 days moving average, and the clear cut, we are seeing the ascending triangle pattern and cup and handle pattern on daily chart also. So GRSC looks very strong. Here also some conditional buy we are applying. 630 is the initial resistance. So wherever price is crossing 630, we would like to go long, aggressive long on GRSC. Stop loss would be 600, and considering the chart pattern, we are expecting 700 of target on GRSC. So on 630, we should go long, stop loss 600 and target 700.
Right. The pre-open trades are in front of us, Tanya. The Nifty is opened 62 points higher, in line with what the GIFT Nifty suggested. So 19,800 is within bulls. We have an uptick of about 86 points at about 19,840. Let's look at what are the stocks that are ticking. Big boy HDFC Bank 2% higher, 1685. Reliance Industries at the moment is showing a wrong tick. Let's avoid it. ICICI Bank 0.5% higher, 1005. Infosys flat at about 1356. TCS up in the green, 3422. Axis Bank 0.5% higher, 958. This is all good news. I'd like to focus on Maruti. It's showing a downtick of 3%. 9.5% at 9,500 rupees. Let's wait for the counter to settle down. I would also like to look at UPL. The company declared its earnings yesterday, 0.5% low at 622. Remember, this is a multi-month low. Let's look at what's happening in the FNO space. This was the Nifty that we discussed. Let's look at the top gainers here. Glenmark Pharma, Bandhan Bank. Bandhan I had highlighted, 2% higher, 228. Glenmark 4% higher, 819. Looks like a pharma day here, Tanya. 2% higher on Ipca Labs, 890. M&M buzzing 0.5% higher, 1482. Let's again look at the heavyweights. Nifty is now flattening out, just 11 points lower, 19740. That's a bit of a dampener. Reliance, let's ignore this number, but let me just show it to you. 2300 down 10%, and this will of course settle towards the better side. I think let's ignore these numbers. Let's look at the broader market, NSE 500. What are the stocks that are on the gaining side? Let's look at PAR India, 2.5% higher, 4040. We have Motherson Sumi, 2.5% higher, 5995. This is Motherson Sumi Wires. A very shaky and a very edgy kind of a start that I'm seeing on the Nifty, now back in the green, 45 points higher, 19800. It's really very volatile. Let's ignore these prices. I'm looking at Bajaj Finance, 7320, up 0.3%, mainly because it's the Fin Nifty expiry. Let's get Kiranji back into the discussion. Kiranji, any bank on the private side that you like in the small cap space? Your view on Federal Bank? We've seen fantastic numbers coming in, and the stock is of course consolidating near record highs.
So considering the small private bank, clearly the Federal Bank would be the preferred choice. Reason being, if you check the current daily chart, it is trading above its all important moving averages, and also we can see one falling trend line breakout on the Federal Bank daily chart. Recently, we are also seeing one rounding bottom pattern on intraday charts. So multiple pattern breakout are coming on Federal Bank. Recently, whatever the corrections come is absorbed near its long-term moving averages. And again, the volume attractions and the way momentum indicator is trading in the bullish zone, we are expecting Federal Bank to perform well in the small private bank basket. Considering the level wise at current market price, if anyone wants to go long on Federal Bank, yes, definitely we can go long. We have to maintain a stop loss below 130, and looking at daily chart, we are expecting first resistance at somewhere around 142. As soon as 142 level crossed, we can expect 150 to 155 level on Federal Bank. So it is a time taking targets. So if you are looking for 2 to 3 months investment plan, then only Federal Bank would be the preferred choice with the stop loss below 130, and the target would be 150 plus.
Okay, absolutely. But Shell, let's focus on the stock that will be in limelight today, and that is Maruti Suzuki. The company posted good set of numbers, and it has officially informed the stock exchanges about its decision to terminate the contract manufacturing agreement with Suzuki Motor Gujarat Private Limited. However, this plan is subject to various legal and regulatory requirements, including the approval of minority shareholders. BTTV's associate editor speaks to R.C. Bhargava. He's the chairman of Maruti Suzuki on the big announcement and its impact. Listen in.
Maruti Suzuki has always maintained that the company would be asset-light model, and by you taking this asset on your books now, sir?
No, firstly, Chetan, I'd like to say we've never said we want to be asset light.
Okay.
The reason in 2014 was not because we wanted to be asset light, because if you remember, our original decision in 2014 was to do the investment ourselves. We were going to have all this Gujarat investment on ourselves, on our books. So we had no intention of being asset light. We became asset light because we got an offer from Suzuki, which when we finalized it, came out so much in our benefit that we said, okay, we'll not have these assets on our books, but we will get a lot of extra benefits by doing this arrangement. So asset light was never an intention. This arrangement was made to get extra benefits more than what any other company in the world gets. And we got those benefits.
Right. Also, sir, what happens to the domestic market for Suzuki and Maruti both combined? Will Suzuki take a hit in any way, or will Suzuki's identity in India will be a little, little diminished with this announcement, or are you looking at separate plans?
No.
Suzuki?
Maruti is a Suzuki subsidiary. The presence of Suzuki in India is entirely through Maruti. Okay, they have their own battery manufacturing plant, but otherwise their presence in India is actually all through Maruti. And anything which is done in the best interests of Maruti is also in the best interests of Suzuki.
Hmm.
Both companies have to rise together. We can do things which will be in the benefit of Suzuki, but not in the benefit of Maruti. But that will ultimately hurt Suzuki in the long run. So Suzuki is very conscious of this fact. And this decision is a joint decision taken with the Suzuki management and us to make an arrangement which will be to the mutual benefit of both, but especially for Maruti and Maruti shareholders.
Right. Okay. Also, sir, the big question that your shareholders would ask you, what should the shareholders do now? Are they in for some kind of troubles, or is this a happy news for them, sir?
We will, after this, after the board meeting discusses, sorry, the mode of buying the shares, go to the shareholders, explain to them what I'm talking to you about, the whole rationale of this, and what we think should be the best way of buying the shares from Suzuki. And then, of course, it's the shareholders' decision whether to support that or not, because we need a majority of the minority shareholders to support whatever recommendation we make. We cannot take all these decisions without the approval of the minority shareholders. There were, of course, legally different opinions on whether we could or we could not. But we chose to follow this option of treating this as a related party transaction to go to shareholders anyway. Because I think that what we are recommending has to be in the interest of shareholders. And whether legally required or not, if we go to the shareholders and explain to them what we're doing and what we are not doing, I believe the shareholders will always understand what is in their interest and that we are trying to do things in their interest and will back us. So it's that with that confidence that we've decided that we'll treat this all as a related party transaction and go to shareholders. So we'll explain everything to them.
Sure. Also, Bhargav sir, considering this acquisition and doubling the capacity 2030, it's very evident that Maruti is very bullish on the India story. Are you also looking at any more acquisitions further from this? Because in the while informing the boards or the boards and the regulatory exchanges, also you had mentioned the company had mentioned that several powertrains will exist. So, is there a plan also to acquire some more lines so that works become easy?
No, we have always grown organically. We have not grown by acquisitions.
Right.
This is really not an acquisition. It was something which we were doing, but which Suzuki stepped in and did it for us. We're just getting back to what would have been the normal situation. We don't intend, or we have no plans at least, of doing any other kind of inorganic growth and organization and growth through inorganic acquisitions.
Are you assessing, or have you uh, uh, understood any impact on of this deal on margins or savings in margin, and what would be the cash position of the company after all of the regulatory approvals are also done?
As far as margins are concerned, in the short term, I see no impact.
Okay.
In the long term, because we are doing this for better management of things, I think it will always have a positive impact. But that will be in the long, it can't happen within 2 months or 3 months.
Okay.
And as far as the cash position is concerned, that will depend after the decision on how the shares are to be acquired.
Okay. Also, sir, any impact on the staff possibly that could be undertaken, with this integration, sir, the second part
Nothing,
is there any synergy that you are looking at with respect to monetary terms?
nothing at all. Well, having a larger organization, larger volume has always some benefits of scale, but otherwise marginal. As I can see, I can't see any major impact because we were already selling this volume.
Hmm.
In production, the vendors of Maruti were also supplying to SMG. So, in terms of total component manufacturers, total sales, dealers, it's going to be exactly what it used to be. I mean, again, I'm talking short term. As growth happens, things will change. But if you look at the immediate impact, I can't see how it will make any difference.
So you are saying that no immediate short-term impact, but in the long term, there could possibly some headwinds that the company may
Long term, it will be immensely beneficial.
Okay.
Because without doing this, we could have a lot of problems in management and these things overall.
Right. Also, Bhargav san, is there any impact of partnership with Toyota, or that's a complete separate deal altogether?
Suzuki Toyota partnership is there that we are having an impact in India anyway. And that will continue to play an increasing role in our future. I think the Toyota Suzuki partnership is already having an impact in India. I mean, the vehicles we've introduced, the hybrid Grand Vitara, now the Invicto, these are all Toyota products with Toyota technology. We wouldn't have had this without this partnership. The EV development, Suzuki is also getting input from Toyota. That's going to have an impact. So I think this partnership is in any case good for everybody.
Okay, absolutely. That was the conversation.
Well,
and
that
now,
was a fantastic.
please go ahead, Shail.
Yeah, Tanya, carry on.
Yeah, so actually, Shail, we have with us Mr.
Maruti
Vijay
settled
Chopra as
out.
well. Okay, I think there's some technical
Yes,
glitch.
please continue, Tanya.
Yeah, absolutely. Thanks much for that, Shail. And we have with us Mr. Vijay Chopra. He's the MD and CEO at Inosh Ventures. Mr. Chopra, thank you so much for taking the time out and joining us here on Business Today television. I want to begin by asking you, we had a fantastic July series, but what are you expecting from the August series? Going ahead.
Well, I think that there's a very critical RBI meeting which is on 8th to 10th. So it would be, interesting to look what RBI stance is. Now, if at all there is no increase in the interest rates, it's good news. If at all we see, the mellowing down of interest rates, it's even better. So I think that, markets would be poised. The kind of FII inflows we have seen lately, they have bolstered the market to some extent. But I think that, market should consolidate. Once we have seen a run up from almost 16,800 to almost to 20,000. So this is a big run. So I think that, market should be in consolidation mode, maybe for August and September. And probably, the next trigger would come from October, when the festive sales and, other things would start. So we've had a reasonably good monsoon up till now. I hope and trust that, August and September hold good promise for monsoon. This means that it's good news for the agrarian and the rural economy.
Bank Nifty is up 100 points at 45,752. And let's look at the immediate prices that come to the screen and the reason why these stocks are up. Of course, I'd like to look at what Maruti is doing immediately. And it opened, it set 0.5% higher in the pre-open trade. At the moment, Maruti is trading flat on the markets, down 1% at 97.21. Let it just settle down. I'm sure the market will pay attention to its earnings, but that's how Maruti is immediately. Let's look at the heaviest weighted counters and see where they are headed. ICICI Bank 0.5% higher, 1,002. Let's look at what HDFC Bank is doing flat, 1653. Let's look at what Reliance is up to, down 0.25, 2543. Infosys in the green, 0.2% higher, 1358. What is Bajaj Finance doing? It's the Fin Nifty's expiry, 7318, up 0.3% in the green. Apart from that, what are the top gainers in this space? It's ICICI Bank, Kotak Bank, and of course TCS and Bajaj Finance. The Bank Nifty 45,770, 118 points higher. Nifty is now flat, 9 point higher at 19,761. Let's now pay attention to the F&O space and let's see who the winners are. DLF is down 2%, 50875. news coming in that the promoters will sell 2 crore 15 lakh shares as a part of a offloading exercise. Let's look at all the other gainers in the F&O space. Hind Copper 3% higher, 146. The rally continues. Bandhan Bank 2% higher, 227.60. India Cement 1.2% higher, 222.25. IDFC First Bank fresh record high, 138 at about 88.35. And we have BHEL 1.4% higher, 105. Remember, these are very, very high beta counters that I am talking about. On the losing side in F&O, we have Power Grid earnings here 4% lower, 255.90. Escorts monthly sales up just 3%. Market disappointed. Stock corrects around record highs, 25.02, 1.5% higher. Maruti now down 1.4, 96.83. Market flat as it can be. Nifty just 4 points higher, 19,758. Let's look at the Nifty 500 stocks which are on the gaining side. I would imagine we'll go with IRFC, fresh record high, 3.5% higher, 39.55. Fact, which is a fertilizer counter, 2.6% higher, 486. Let's look at HEG, 1831, 1.7% higher, and Cochin Shipyard, 1.2% higher, 682. Tanya, these are the heaviest weighted counters that I am seeing. Nifty slipping from an intraday high of about 19,795 to about 19,758. These are initial trades. Let's see how the first 15 minutes pan out. Let's get to Kiran Jani. Kiran, anything that's caught your fancy in the initial trade, and then we'll get Mr. Chopra into the conversation.
Okay. So looking at the current market status in the opening, we are seeing the metal sector is continuing like whatever they left yesterday. So JSW Steel is coming on our eyes. It is trading at all-time high. And the way it is trading, 820 is the recent resistance was on JSW Steel. It is breaking out. So keep eye on JSW Steel. If any dip around 815, 810, 810, it should go long. The stop loss should be below 800. And looking at the daily chart pattern, we are expecting 850, 860 kind of target on JSW Steel. So our eyes on metal sector. Another sector we like to trade, it's IT sector. Considering the Infosys also breaking out is since last 4-5 days range. So Infosys another pick after JSW Steel. If Infosys also cross is 1360 level, then we can expect some good amount of short covering on Infosys, and we the prices should head about 1400. So Infosys also conditional buy about 1360, stop loss would be 1350, and target would be 1400.
Okay, absolutely. And Mr. Chopra, I want to come to you now, and let's discuss about the auto space. That space will be in focus ahead of the auto sales numbers, and also Maruti Suzuki also posted good set of numbers yesterday. What are your thoughts on this particular space, especially ahead of sales numbers, and any stocks that are on your radar at this point in time?
Well, I think that auto space has done reasonably well in the last couple of quarters, and I see that the next few months are also going to be good. Post monsoons, generally we see a decent uptick, especially in the lower rung, entry level cars in the two-wheeler segment, and we are seeing that a lot of companies are coming with EVs as well. So I think that autos should do well with the next 2 quarters in view. And at present, I like a stock called Jamna Auto. So Jamna Auto can be bought at these levels. I see a decent 15 to 20% rise in Jamna Auto. So I think that 130, 135 could be a target.
Jamna Auto is one of those wonderful auto ancillaries that has been very high in demand. If you look at the long-term chart, we are seeing an all-time high of about 134 rupees. The stock at about 112. Let's get Kiran into this discussion. Kiran, would you want to comment on Jamna Auto? Yesterday was a blowout day. The stock had a low of about 108.65 and closed at 112.30. What are the charts telling you for the medium term as far as Jamna Auto is concerned?
So yes, definitely. The amount of buying we are considering, we are observing on auto ancillaries. Jamna Auto is preferred counter. Definitely, it was on like underperformance tone. We have seen all-time high somewhere around 133 level, and since then we are seeing a downfall. Channel is panning out on daily time frame. Recently, we have seen a breakout somewhere around 106 level, 110 level. There is the ascending triangle pattern breakout is also there. Considering this pattern, there are chances we can see Jamna Auto should touch somewhere around 130 level again back. So if any tips come around Jamna Auto, it should go long. Stop loss would be 100 and target would be 130. In the same sector, I would like to highlight one more stock, that is Precam, Precision Camshaft. If you see that stock price is trading at all-time high on daily time frame, as of now, the stock price is on negative tone. But if any dip comes around 220, 200, we should look around pre-cam for the long-term buy.
Okay, let's focus our energies on Jamna Auto for a while. The company has a fairly decent market capitalization of about 4,481 crores, and it has a trailing 12-month earnings about 168. We've seen a very sharp rally over the last 4-5 months on mid caps, and even at that instance, the price earnings ratio for Jamna Auto is just 27. The all-time high, like I mentioned, was 134, and the counter ticking merrily away at about 112. If you see the long-term charts of Jamna Auto, it's been a very well-established multi-bagger. Over the last 10 years, the stock has appreciated about 31% each year, so that's the CAGR. It's very well handsomely beaten the BSE Auto Index, which appreciated by 13% per year over the last decade, and of course the S&P BSE Small Cap Index, which gave you a 10-year CAGR return of about 21%. So these one of those lovely stocks which you can probably hold in the long term, and the price to book at the moment for Jamna Auto is somewhere like 5.7 versus 2.8 for the PM median. So relatively it looks a bit expensive, but that's how it is. Let me just try and find out. Yes, the stock, the current PE of about 26 is nearly in line with the 5-year median PE of 25 for the stock, and the revenue at the moment is for the trailing 12 months about 2,325 crores, a net profit about 168 crores, and a very low debt of about 19 crores. In fact, the company has gone out of its way to cut down debt. A year ago, this debt was about 90% higher. So low debt, a multi-bagger stock, very nice market capitalization to sales ratio, and of course in probably the best booming sector, which is auto ancillaries. We've had a technical input on Jamna Auto. Let's get back to Mr. Chopra. Mr. Chopra, another one or two things that you would like to mention on Jamna Auto. What are the reasons that you like it?
One, that the quarterly performance has been fairly good. Quarterly they have posted a number of about 634 crores. The EPS has increased from 1.03 to 1.32. The sales have gone up. The annual sales I'm looking at, it has gone up from 1,718 crores to 2325. So I think that the sales numbers have been really good, and I think that the stock can move up a bit. It's not that expensive, and we have seen a decent run up in the auto ancillary and auto space as well. So that's why I think that Jamna Auto should do good. There are other auto ancillaries as well which I like. Asahi India is one of those stocks which I really track, and I appreciate. It's a Japanese company, and among all other auto ancillaries, if you say, I think that in a correction you can buy Motherson Sumi and Motherson Sumi Wires as well. So there are good opportunities in the auto and auto ancillary space. Keeping the next 2 quarters in consideration, I think that most of the sales autos book is around October to November, December, where we have the festive season. So I think that autos should do well with two quarter perspective.
Right. Right. And apart from the promoters who hold about 50% stake in this company, the funds that are invested in Jamna Auto read like the who's who. ICICI Pro Mutual Fund has about a 4% stake. Axis Mutual Fund has about 1.5% stake in Jamna Auto, and Invesco Mutual Fund, known for its mid-cap stock picking abilities, owns about 1.5% share in Jamna Auto from the auto ancillary space. So this was a small discussion on a probable portfolio stock that you could have in your holding, which is Jamna Auto. But coming back to the markets, Tanya, Nifty flat as it can be, 16 points higher, 19,770. Nifty Bank 45,730, up about 77. And HDFC Bank is kicking in as far as the bank is concerned, as also ICICI Bank. So ideally, it's likely to be a day when you'll see the bank Nifty outperforming the Nifty. Tanya, what are you watching?
Absolutely, Shail, and let's have a small discussion on RVNL as well. I mean, the stock was in focus and we were discussing it yesterday as well, but I want to bring Mr. Jani in this one. And you know, the company has received letter of award for 2 projects from Madhya Pradesh in Jabalpur company area. And also, you know, this is the stock is in focus on the back of deal wins, and of course the agreement for Vande Bharat trains, and OFS has also received a very strong response. So let's pull up that stock for you, RVNL. Okay, it's up around 1% in today's trading session as well. Mr. Jani, your thoughts on this particular counter? We have seen a sharp run up in RVNL, but is there more steam left, or is it time to book profits?
So considering RVNL chart, we have seen that in month of May, RVNL claimed the highest level of 144. Since then, we have seen that prices were trading into the very small range, where we have seen the resistance somewhere around 127 and the support were at 115. So stock was consideration in this 15 rupees range for almost 2 months. We have recently seen the news back of OFS. The prices has been boomed up and it made a high of 150 again. However, since last 5 days, we are seeing that the prices is trading into the falling channel. But here we can see the massive support of 50 days moving average and 20 days moving average. So looking at current juncture, we can see some good amount of up move until and unless prices is holding up 118 level. So a very strict stop loss we have to follow for the RVNL. Whoever is holding the stock or whoever taking the fresh position at current market price, 118 is the very strict stop loss. If that level is broken out, then there are chances we can see prices to fall somewhere around 110, 100 rupees range. So at current market price, we can go long whatever dips come. It also a buy opportunity. 118 will be the stop loss, and the target for the price for short term is somewhere around 140 to 145.
Okay, absolutely. What about you, Mr. Chopra? Your take on entire PSU space and specifically on RVNL?
Well, I think that all the railway stocks have done stupendously well in the last 6 months to 1 year. RVNL, I think that has the potential still. It has some steam left. So I think that 10 to 15%, and then probably, one can start booking profits. So among the rail pack, we mentioned about IRFC. I think that financially also IRFC is one of the best placed stocks for a long-term haul. So I think that, I would better prefer a IRFC over an RVNL. And I think IRFC can go to 50, 55 again. So, IRFC is one of the best stocks I like in the railway space as of now.
Okay, absolutely. Shail, anything that you're watching at this point in time?
Yeah, the entire PSU space is buzzing with gains, Tanya. I'd like to highlight Hind Copper, up 7% at 150.50. Remember, this is a fresh breakout. I'm seeing a record high on IRFC, 2.75% higher, 39.20. On the metal side, National Aluminium is buzzing, 97.50, again 2.3% higher. The PSU banking space is showing strong traction. We had interviewed the CMD of JK Bank, now up 3% at 68.55. I'd like to take Mr. Kiran Jani's view on NTPC. Remember, this is a stock that's headed for fresh record highs, up 2% at 222.45. Mr. Jani, we'll draw the daily chart for NTPC in front of you. Just last week it had broken out of a decadal high, and I would imagine, yes, we have a very, very strong breakout in the offing, 222. Mr. Jani, what are your charts saying? Is this a good idea to enter the stock now, or probably wait for some kind of a correction? Over to you, sir.
So you have rightly mentioned, sir. We were looking at same chart. A decadal breakout candidate is NTPC after BEML. We can see that 222 level were happened in 2008. Now that level are testing at current market price. So definitely it will face some resistance. It will face some like in supply zone, because we can see that people who are holding the stock since like decade, they are trying to sell it out. So there are chances we can find some supply. So now coming to the daily chart, a massive amount of volume we are seeing since 190 level. A continuously average 20 days volume was crossed every day with high delivery marking. So the steam is definitely left. We can see the higher level. But at current market price, I would say be cautious. Keep a strict stop loss below 190 and wait for the dip. If any dip comes around 200 level, we should go long. At current market price, one should avoid taking a very aggressive position, because we are also seeing that there is a very stock selective performance is coming. So if any bad news comes, we can see this high leverage position get sold and margin call will come. So these are the market sentiments considering we are expecting some dip on NTPC somewhere around 200 and 210. That would be the great level to enter into the market. 190 would be the positional stop loss. And looking at daily and weekly chart, short term, we are expecting 250 to 260 target on NTPC.
Right, sir. Let's get Mr. Chopra into the discussion. Sir, would you want to comment on the fundamental aspects of NTPC? We've seen a blowout happening on the PSU space, and of course NTPC coming back on our radars after a gap of about 10 to 11 years. How do you see NTPC as also the entire power sector?
Well, India is a power-hungry country, and I think that we would require power if we need to grow, especially with the need of EVs, which is growing by the day. So the requirement for power would increase even more, apart from domestic demand and industrial demand. But NTPC, so to say, has run up quite a bit. I think that there should be some correction around the corner. So ones who are holding for a shorter period, they can book profits and wait on the sidelines and again get into the stock when you get around 180, 190. So it's a very, very undervalued stock. All the PSU stocks, if we talk about, have deep intrinsic value. So I think that these stocks can be held on to. We are seeing a breakout, a lot of good things happening in the PSU space, PSU banking, as you said. So I think that short-term traders should book profits at these levels because it has run up quite a bit. But yes, I would say that this stock can be lapped on to if at all you get it in a correction for a longer period. So NTPC is a wonderful stock, wonderful company, Government of India, no stress at all in all other fashions. So another stock which I like in the private sector power space is Tata Power. So I think that Tata Power is also one stock which can be a portfolio stock in the longer term. So Tata Power can touch maybe 300 in the times to come. So Tata Power is also one of the stocks I like.
Right. While we are at NTPC, let me just highlight some of the financial details that's boosting the stock to record highs. Of course, we have a market capitalization of 2,11,000 crores. But I'd like to add a point here that the top line for this particular company is somewhere like 1,70,000 crore rupees, and the 12-month earnings are about 17,850 crores. This is an immensely huge profit-making company. at a record high now, but just look at the price earnings ratio, just about 11.2. So these are the deep value stocks that are coming out of the woodwork, and consistently returns have been made. Consistently the company has outperformed on the financial side, but the stock has underperformed only because of its ownership, it being tagged as a government PSU. If you look at the CAGR returns over the last 10 years, NTPC has just appreciated 7% each year. It's underperformed the BSE Sensex and the BSE PAR index, and this is this spring that's coming out. If you look at the last 3 months and 1 month performance, 1 month it's up about 16%, 3 months up about 27%, and it offers deep value even at current levels. If you look at the PE, I mentioned it's 11.28. If you look at the peer PE across the entire sector, it's 16. The price to book is just 1.4 compared with an average of 1 over the sector, and it still has a dividend yield of 3.3%. So these are stocks where markets are now seeing deep value. Of course, they've run up very sharply. I just saw, I think, 170 on NTPC a couple of months ago. Let me just check that again. I have the daily chart in front of me. Yes, 185 in the middle of July 14th, the price was 185. We are sitting on 223, which is a fresh record high. Of course, technicals will tell you this probably is not the right zone to enter an overheated stock, but the fact remains that once this corrects, you'll find more buyers waiting with open arms to get into NTPC. Tanya.
Absolutely, Shail. I think while we are discussing, power companies, let's discuss Power Grid as well, because we have NTPC as the top gainer, but on the flip side, Power Grid is the top loser in today's trading session. So, Mr. Johnny, your thoughts on this particular counter?
We are talking about NTPC, right?
No, Power Grid.
Okay, Power Grid, sorry. Looking at Power Grid chart, the daily on daily time frame, we can see that the stock has given a breakout on 250 level. After that, the multiple top has been made somewhere around 265 to 260 level. However, prices are not able to sustain over there. Considering NTPC, the same way Power Grid is also trading is all-time high, and we can see the last year stock price has made a high of 248, and now on monthly basis, yesterday we can see the first time close on 250. So looking at this long-term chart, definitely if any dips come around or even at current market price, we should go long on Power Grid. If you are a long-term investor, or at least if you are okay to give a trading investment time of 6 months, then you please look into the Power Grid. Whatever dip or current market price, you should go long. Considering the chart pattern, we are expecting target over 300 and the stop loss would be 230. So Power Grid, go long with the stop loss of 230 for the target of 300 for next 6 months.
Okay, absolutely. That's the verdict coming in on Power Grid. And on that note, thank you so much, Mr. Jani, for sharing these ideas with us and being with us here on Business Today Television. And Mr. Chopra, your thoughts? We were discussing Power Grid. So what is your take on this particular counter?
Well, I think it's a correction after the result. The company has posted the results which are not that encouraging. There's a drop in the net profit of about 1,000 crores. But yes, like NTPC and Power Grid, these are portfolio stocks, I would say. And once the correction is over, these are, perennial businesses, and, they keep on churning profits, quarter on quarter, year on year. And I think that, these have very deep intrinsic value as mentioned by your co-host. So I think that, once the correction is over, the stock might be available, 10, 20 rupees below these levels. And that would be, fresh, according to me, a fresh entry point as well. So I think good buy at lower levels, not here. Let it correct and let the dust settle down. And I think that, this stock will come back very sharply. It's a good dividend yielding company and a stock, and could be a portfolio stock for the longer term.
Okay, in any space in which, you are booking profits in this type of a market?
Well, I think that, practically everywhere you're getting, the way I see any stock getting away from the 50 DMA, very sharply, we start booking profits there. So,
Okay.
in such markets where markets are near the all-time highs, it won't be a bad strategy that, we restrict our profits to maybe 10-15% and then, wait on the sidelines or get into another story which is available at a lower level. So I think that, we are definitely booking profits all around. And I see deep value in the public sector banks. Chemical stocks have started correcting. So I think once the correction is over, chemicals is also another area where we can get into. Fertilizers look very good. I think that sugar stocks can be latched on to post monsoon for the festive season. So I think that sugar stocks also are good. We've seen a decent run up in the defense companies. So once the correction happens in these companies, we can start getting into these companies again. I like a company called Solar Industries, which is good. Tech, for that matter, has a lot of promise. It has corrected quite a bit. I think that good fundamentally strong top rung tech companies we can start nibbling into these companies. So lot of promise in the market still. And I think that, markets are going to consolidate and then move up further if we do not hear anything negative. I'm waiting for the RBI monetary policy, what happens there. And I think that, if
Right.
at all, even if there is there's an indication of a dip in the interest rates, the markets are going to give a thumbs up.
Let's again pay attention to the broader markets. Tanya, we've seen a very, very sharp rally taking root in stocks which are beyond the index. So the broader markets advanced decline ratio is now a handsome 3:1. We have about 1420 stocks in the green and just 455 in the red. Just look at how the NSE 500 has, sort of again got back into that typically high zone. The advanced decline ratio for the NSE 500 is 350 stocks in the green and just 150 in the red. So very, very strong traction coming in from the broader markets. Let me just highlight a few very high beta stocks that are clicking very well. Let's see the Bombay Stock Exchange. You have seen 817 on the charts. The stock almost at day's high, trading very, very sharply higher. This is a multi-month high for the stock, up about 1.5%. Let's look at CDSL. These two stocks move side by side, up 2% at 1258. And let's look at CAMS. CAMS is trading 2% higher, 2406. So these were the three stocks that move in sync: CDSL, BSE, as well as CAMS. And it's a breakout that's happening on Dr. Reddy's. The entire pharma space ticking merrily away in the green. Let me just highlight what the main index on the pharma space is doing. I'm sure it's one of those top gainers because I see a lot of pharma stocks buzzing on my screen. Yes, the Nifty Pharma is the second best index on the gaining side, 0.6% higher, 15,083. So again, a fresh record high on the pharma index. And what are the stocks that are ticking away towards the green as far as the pharma space is concerned? Let me show you and start with Dr. Reddy's. It's up smartly, open interest up 2.5%. It's at 1592. That's a fresh record high for this one. Amongst the stocks on the high beta side in the pharma space, we see a breakout on Glenmark, 795 in front of my screen. Ipca Labs 1.5% higher, 890. Divi's ticking away 0.8% higher, 3708. And of course Lal Path Lab and Sun Pharma in the green. We have strong traction that's coming in on Bajaj Auto. Monthly sales were really good. So Bajaj Auto at day's high as far as the markets are concerned, 4987. And of course market favorites, BEL record high here. It's a defense play. And BHEL, all PSU stocks 106.70. So that's how the markets are, Sakshi, Tanya, at this point of time. in the broader space. Nifty up 21, 19,775, and Nifty Bank up 56, 45,704. Tanya.
Absolutely, Shell, and I think these were the stocks that are in focus. But we also have with us the management of Sonata Software, and the company reported its earning for the first quarter, and the international services revenue in USD terms grew by 17.5%. And domestic gross contribution grew by 6.4%. We have with us Mr. Samir Dheer. He's the MD and CEO at Sonata Software. Thank you so much, Mr. Dheer, first of all, for taking the time out and joining us here on Business Today Television. Stellar set of numbers, Mr. Dheer, and I want to begin by asking you, that you have mentioned in your press release that the company has won largest ever multi-year modernization deal in Europe with a manufacturing client. So if you could tell us about this deal, and also any more large contracts you're hoping to sign going forward?
Yeah, sure. So I think the deal that we just recently signed in the past quarter is a very exciting deal because it is the largest deal for Sonata in the Europe market ever. This is a multi-year contract to help our client, which is a manufacturing company, help them in terms of modernization, in terms of making them more efficient and improving their customer experience. This is about a 2.5 year contract, followed by more follow-on work post this deal is fully consummated. So very excited about this win. It sets a fairly high bar for us because this is a fairly large deal for us in the European market. Now, beyond that, our large deals pipeline is close to about 40% of our total pipeline, which has been growing. Same time last year, our large deal pipeline is about 20% of the total pipeline. So we sort of made significant progress because of the investments we're making in the business. And we're in active pursuit for another 6 to 7 deals, which are of high value nature that are being pursued by our sales and delivery teams at this point in time. And hopefully we can continue to take the market share away from the other suppliers as we move forward.
Mr. Dheer, welcome to Business Today Television, and yours has been one of those dream runs on the market. We'll just show you a daily chart of Sonata Software. The stock has doubled to more than 1,000 levels in this 8 months that we've seen, and it's been a further spectacular rally. If you see from the lows of March 2020, that's the COVID low. The stock was at about 125 and now at about 1,057. So that's 8x multi-bagger in front of you. And in the past 8 months, January 2023 to August 2023, the stocks doubled from 500 to 1,000. Mr. Dheer, these are very, very heavy expectations out of you to maintain this kind of an outperformance on the stock, as also on the business, must be one of those challenging tasks that you face every morning. Tell us, give us a granular feel of how clients are negotiating business these days. Do you feel pressure on margins? How is attrition shaped out in the month of the previous quarter? We had seen a lot of top line companies reporting very few additions to their overall employee strength. How are you negotiating these two challenges, sir?
First of all, thank you for your compliments. We are very pleased with the progress we have made in the recent times. Our teams have done a fabulous job, so credit to our teams to do that. But beyond that, to your specific questions, I think the market has been, it's uncertain times in the market, to be candid. The deal flow, especially for us in the high-tech sector, there have been decision delays without a doubt. But beyond high-tech sector, we haven't seen any significant slowdown for us. And our strategy was very simple. We wanted to continue to close large deals every quarter so we can keep building the buffer to avoid the market eventualities that might happen. When you build the large deal pipeline, one of the things that you have to do is to also plan for the staff in advance because the transition, etc., takes a quarter or so. And that's what we have been planning for the last couple of quarters specifically to make sure that we are ready for that. As far as pricing is concerned, we haven't seen any pricing pressure come through just as yet. I think the pricing very much is holding up. In fact, in a few cases, we'd had some price increases as well that we could negotiate from our clients, which I think has been nice. And as far as the overall broader margin situation is concerned, I think we're pretty bullish about where the company is at from a growth perspective. We will continue to make investments. We have called out in a 3-year strategic architecture that we expect to be about 500 million in the international business and low 20s EBITDA. That's a journey we are on. We made tremendous investments in sales, in our marketing, and very recently, very pleased to announce, you might have seen that we announced the Harmony.ai, which is really our response to the whole generative AI space. And we believe that as market comes back around on the data side and AI investments, we think we can capture the market with our responsible first AI. And that's been something that we are very certain about, because the whole AI market is full of hallucinations, full of compliance issues. So we're really taking a position as a company to be responsible first in the AI space, and hence our investments in Harmony.ai are very timely. And we're beginning to see a lot of pipeline build up as soon as we launch that suite out.
Okay, absolutely, Mr. Dheer. And let's talk about your domestic
Mr.
products.
Dheer,
Can I take a question, Shail?
Tanya, please continue.
Yeah, thank you so much. So, Mr. Dheer,
Please
I was
continue.
saying that let's talk about your domestic products division as well. Though that's a lower margin business for you, but it had an good quarter of financial performance. Gross contribution grew by 6.4% on a quarter-on-quarter basis, and obviously 22% on a yearly basis. But how do you see this business, shaping up going forward?
Yeah, no, we're very pleased with the progress we're making in the domestic business. Candidly, I think 6% quarter on quarter and 22% nearly year on year is a very good outcome. It's a very high ROCE business, return on capital employed. It's a very high. It's one of the industry leading ROCE business. Our strategy is simple. We are diversifying or expanding that business to be more multi-cloud channel. So far, we were very one product channel. And as we move forward, we are trying to take the market position of a multi-cloud provider for our clients in the domestic market, and also to look at some significant focus areas in terms of doing some end-to-end projects and SI work as well for these clients. So the two parts of the strategy to really get to multi-cloud as well as large deals in the Indian market as well. But very pleased with the progress we have made. I think it's a very predictable business. Very pleased with the outcomes that we've seen in the most recent quarter.
Mr. Dheer, I wanted to take your broader view on this artificial intelligence that you spoke so clearly about. There's this fear, in circles which are not so aware about this particular sector, that this is the end of India's software story, led typically by low-cost employees that we are able to hire in India who do top-end work for clients based in the US. Do you feel this fear is justified? Will we see a large scale attrition, or companies such as yours asking people to leave because now software automation would replace a human body, sir?
No, it's a great question, and in my view, with every turn of technology changes and enhancements, there is always a talk about, for the last 20-30 years that I've been around in industry, that people have prophesied that this will take the headcount down, and this turn will now result in some more headcount reductions. Candidly, it has never happened in the past, and I expect it will not happen now as well. That's our collective view as a company. We believe AI is yet another tool for the human capital to not take advantage of and really build the next set of automation, next set of efficiencies, next set of enhancements in the business. And that's what we're beginning to see. AI, as you know, has been around for a very long time. I think the work to be done, candidly, is to use AI in a responsible way. You don't want the consumer information. You don't want the proprietary information of individual, the PII data, as it is called, to be misused or abused in any way. And hence, really, our focus has been as a company to really provide a responsible first AI and really drive that insights from a consumer mindshare perspective. We believe this is just the early part of that journey. we believe this will open up new doors and vistas that perhaps were not open to IT industry in general and IT services from India, broadly speaking. We believe that will only be accretive overall to the business environment, and hence our investments, hence our messaging is positioning, and our solutions are really tailored towards that. So far, whatever we have seen so far, what we have been talking to clients and have been in over 20 conversations with the customers, everybody is looking at it as an add-on to be more efficient and really deploy the human capital back into doing more and more value-added activities as we move forward.
Right. The other thing, Mr. Dheer, I'd like to seek clarity from your end. Is these stratospheric valuations relative to large caps in the IT space that small cap and mid cap IT is enjoying? I mean, the problems across the sector are very well known. We've seen a slowdown happening in the BFSI space globally, and this is one of those main sectors where Indian IT makes the maximum amount of margins and maximum amount of top line. What, according to you, are mid-cap IT companies doing better than large-cap IT companies that justifies this huge markup that companies such as yours enjoy over large-cap names? I don't want to take those names, but you understand the thrust of my question, sir.
Look, I cannot comment what others are doing. What I can comment is what we are doing. And we are very focused on taking market share away from the competition using our modernization engineering vector. We believe we have a secret sauce. We believe the tools and the IPs that we have built over the period of time and the frameworks that we built over a period of time continue to differentiate us. We believe the partnership that we have built with the product vendors is really beginning to help us accelerate. So in our mind, in this environment, the agility with which the suppliers can move, the customer service and experience and the quality that the suppliers can provide, and the ability to pivot to new technology changes is a differentiating factor for at least companies like us. And that's what we're doing. We're playing to our strengths. We are moving fast from a technology adoption perspective. We are moving fast from evangelizing and the benefits of newer technologies coming up. And we are more responsible, making sure our quality delivered to the customers of top-notch caliber. So that's really what we're doing. It's hard to comment really on what competition is doing, what others are doing. And we're really head down for the last, I've been in this job for about 5 quarters now nearly. That's what we've been doing, and that's what we intend to do go forward as well.
Okay, and lastly, Mr. Dheer, your expectation in terms of organic growth in FY24?
So much like we have said in the prior times, we have aspired to be one of the fastest growing companies in the market and get to 500 million international business, that is in about 3 to 4 years time. We have been delivering top quartile performance from a growth perspective consistently for last several quarters. We expect to be in the top quartile performers go forward as well. And of course, we'll calibrate up and down depending upon the market's vagaries. But still, whether the market is up or down, we expect to be in the top quartile performer in that sense. Even the most recent quarter, as you've seen, we are perhaps in the top 2 or 3 companies, maybe top 1 or 2 itself in terms of performance, and we expect to be in the top few select club of top 25% quartile performance as we move forward. So that's really our aspiration, and we feel pretty good about where we are and to make sure that we can deliver to that expectation.
Absolutely. We also hope the same, and all the very best for the upcoming quarters as well. And on that wonderful note, thank you so much, Mr. Dheer, for taking the time out and being with us here on Business Today Television.
Thank you so much. Bye-bye.
So, Shail, back to the markets. I think we are still holding on to the gains, 100 points uptick there on Sensex.
Yeah, Tanya. So 19,775 on the Nifty, about 23 points higher. Remember, the tide has changed for the better. We are headed higher. Nifty Bank, 17 points, absolutely flat. But the theme is, of course, PSUs. And just as Mr. Dheer was speaking, mid-cap IT started clicking. Birlasoft days high, 433. And of course, Infosys at days high, 1365. Great time to be in the market, Tanya. The entire PSU sector is aflame with gains, and left, right, and center, we are seeing very, very strong buying happening across the board, at least in stocks that are relatively less expensive than the frontline ones. Over to you, Tanya. Let's wrap this up.
Absolutely, Shail. Great time to be in the markets, and let's see, how this action pans out going forward. So, on that wonderful note, thank you so much for being with us here on Business Today Television. And if you look at the markets right now, of course, we are still in the green, and it's the stock specific. And as Shail was saying, it's all about PSU space today. So with that, it's time for me and my team to wrap up this edition of Market Today. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn, and Instagram. So stay tuned for all the latest market updates, and many thanks for watching.